All right. Welcome back, guys and gals. Hope you guys had a fantastic day out there, but it's time to get back to work tonight, Thursday evening. It's March the 4th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight, got a pretty important job tonight, right? My job tonight is to help us identify the best trades for tomorrow, not just any Friday, but Non-Farm Fridays trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are already in the background, as you can see. Got the E-minis, we got the Nasdaq, and of course, we got the gold on our radar for tomorrow. Speaking of tomorrow, first of all, got some big news coming at us early tomorrow morning. I want to make sure you guys are ready for that. And we also a bunch of ranges on the charts. And so, of course, in tonight's video, we'll talk about how to use those ranges for failures and breakouts. Not to worry. Got a bunch of really great setups we're tracking to finish off the first week of March tomorrow morning. Before we jump in, though, and get this video going tonight, I just want to make sure to remind you to subscribe to our YouTube channel. You know, we publish this video every evening with our best trade ideas for the following day. I don't want you to miss our next video newsletter. So make sure you subscribe to our YouTube channel. And when you do, hit that little bell icon so you always get notified every time I publish something new. And don't forget, if you guys have any questions, you're more than welcome to drop those questions in the comments section for me. I'll get them answered as soon as possible later on tonight. And you know, I really appreciate you guys tuning in every evening and carving out some time with me on this video newsletter. If you enjoy this video as much as I enjoy making it every evening, how about a thumbs up on the video? Hit that like button if you guys enjoy the content here tonight. So again, don't forget to subscribe to our channel. That way you don't miss the next video newsletter. Drop those comments if you got them, or those questions in the comment section, and thumbs up if you guys enjoy the content here on this video tonight. But enough of the intro. Time is ticking. Friday morning is right around the corner. Let's grab a look at those charts and get us ready to finish up the first week of the month of March. Now, of course, it must be a big news day coming tomorrow. There must be something coming tomorrow because it smells like ranges out here today. You can definitely tell lots of ranges across the board. Now, a lot of these markets are very similar. There are big ranges, right, on the S&P, on the Nasdaq, and the gold. Big ranges here acting as basically as magnets. So we have these big bear moves down, right? If these bears can't hold this, right, these prices lower, we're likely going to see these markets snap right back up into those trading ranges. So we definitely have some big magnets overhead. I would love to get long on really all three of these markets. But of course, we are very bearish right now. So I got to be careful, right, handling momentum. Now, what is really interesting is you'll notice we have a couple smaller ranges, right? Range on the E-mini, range on the Nasdaq, and range on the gold. So it's kind of like the tale of two ranges, right? As we go in, we get the big range overhead acting as magnets, and of course the small range below, which we're going to use tonight, and of course tomorrow morning, obviously, to time the entries into our setups. So we'll use one range as the magnet, the big range overhead, and we'll also use the smaller ranges to time our entries, right? So looking for the long side here on pretty much consistently across the board here. Obviously, we are very bearish right now, so I do want to keep my eyes open for short setups, but we'll talk about more details here once we dive into these videos in this video tonight about why selling short right now might not be the best or highest probability trade we could ask for here. Now, before we jump in though and talk more details about the individual setups across these three markets, let's make sure we check the schedule for tomorrow, because as I've been reminding you guys all week this week, we are going into the end of the first week of the month. Now, whenever I think of the first week of the month, two things come to mind, right? Volatility and non-farm payrolls. The end of the month is always the most volatile time of the month. The following week, the beginning of a new month, and that transition into a new month, especially the month of March as we go into quad witching in a few weeks, always anticipating this first week to be an uptick in volatility. And boy, oh boy, it is not disappointed this week, right? We've seen a very volatile first week of the month. We also know the first Friday of the first month, or should I say the first Friday of the month, right? Every month has one, is Non-Farm Friday. That is a big news report for tomorrow, right? So of course tomorrow, first Friday of the month is Non-Farm Friday, right? Also known as the employment situation. Now, of course, That's the big news of the session tomorrow. And it's really important tomorrow we remember it's a Friday morning. Friday mornings are always early in, early out. You got to have a good reason to be trading after 11 o'clock, 11:15 on a Friday morning. In fact, in most scenarios on a Friday morning, you can almost kind of set your clock to that 10:45 milestone. It's amazing on a Friday morning, right at 10:45, it's like all the volume just drains out of these futures markets. So I always keep an eye on 10:45. My job tomorrow morning is going to be get in early, get those trades early, and then cut it loose early ahead of that 11 o'clock, top of the hour. As far as trading after 11 o'clock, be very careful because remember, as you go later in the day on a Friday, we start seeing more gambler's mindset, right? End of the day, end of the week, that scarcity mindset sneaks into the market. There's not much time left. Traders often take tremendous risks, tremendous gambles in the end of the day, end of the week. So be careful after 11 o'clock. We do take on more of a gambler's mindset in the financial markets. So tomorrow morning, we'll get together in our trade room like we always do at 8 o'clock Eastern time, and our job will be to get ready for that employment number coming out at 8:30 Eastern time. We're going to give it a few minutes after that news comes out. We'll update our charts a little bit, and then we'll find momentum, we'll find our levels of support and resistance, and we'll find our entry setups together in the trade room. Don't forget, 8 o'clock Eastern time tomorrow morning as an advanced member with us every morning for that matter, Monday through Friday in our trade room. So now you guys know the plan for tomorrow. Early in, early out, big news at 8:30. We're not trading the news, right? We're trading the reaction to the news 10 or 15 minutes after that news comes out. All right, back to our charts here tonight. S&P's ready, Nasdaq is ready, gold is ready. I'm glad to see you are ready right along with us. Now, like I said earlier, a lot of these markets are very similar with a big range overhead acting as a magnet and a small range right down below it, which we're going to use to time the entries. In all reality, that small range is really what kind of keeps us from getting short right now. It really makes it difficult. When I look at this S&P right now, it is very difficult for me to justify getting short right now because of what's happened today. Now, of course, we had that big move down in yesterday, right? Big move down yesterday. As we talked about in last night's newsletter, the goal, of course, was to short the pops, right? Short the pops. So basically what happened today was, right, the market, of course, everyone's trying to short. They're trying to short all the pops, right? So, of course, bears come in, short the pops, bears come in, short the pops, and they eventually send this market running lower. What is really interesting, though, as the market takes off the downside, is it takes a little break here, right, into a range, and then shoots below the range. This is a very important clue. It shoots below the range, and now we've got this bullish rotation going back higher again. This is a very important clue because we know that range, of course, acts as a magnet. But as this momentum swings off of this low now, there's a good chance this thing snaps back up and goes right back up into that big range we have overhead. This trading range, this smaller range, is also the biggest reason why I really don't want to short this thing as the market goes lower, right? Because ranges act like magnets. So if the market runs lower and I try to sell this thing down here, I'm selling right into a major low. I've got a support trend line. I have a range acting as a magnet. It's just, again, it's difficult to find a good high quality spot to sell short right now as the market goes lower. That's why, when I find myself in these situations, the sellers are almost kind of boxed in. They really don't have many options, right? If they try to sell short as the market goes higher, well, now this momentum is really starting to pick up, right? That range overhead will act as a magnet. If they try to take it lower, right? Try to go lower here, well, now you're asking for trouble because now you're selling low, you're selling underneath the range, you're asking for trouble there. So I'll tell you right now, it doesn't feel good to be a seller right now on these E-minis. Now, obviously, Obviously, this is a bear market. This is not a bull market. So I have to be careful, right? Trying to pick a bottom, so to speak, on this move. You'll notice I have an open loop down here at that low. That's a very strong move down, which means sellers are going to try to retest that low. And I hope they do. Because what I have to do is get these bears down around those lows. Hopefully they aren't watching this newsletter, right? And they'll try to get short down here, and we can literally buy right into those stop losses and snap this sucker back up again. Or as the market goes higher, I'll bet you're going to see a lot of bears try to get in around this 37.85. That was the support level we talked about in last night's newsletter. But again, if the market runs higher here, does that look like a bear market? No, right? It's a very bullish move rotating off of the low. If you're a client of mine, you know how that rotation off the low really gets that momentum whipping higher here. So as the market goes higher, I have a hard time being a seller on that too. There's a trend line coming up, right? So very difficult to want to sell, right? That, again, as the market goes higher here. So hopefully by now I've kind of made my point as far as it's going to be difficult to be a seller. Now, obviously the bears may come out, the bears may run this thing lower, and we may get another big leg down, big round number, right? Some major levels below us. But we've got to be careful, right? Got to be very careful right now. Not a lot of really great options to be a seller. So let's play some scenarios here. That way you kind of know what I'm looking for tomorrow and what we'll be looking to do tomorrow morning in our trade room. Now again, the ranges are magnets, right? The big range overhead, that's the big magnet overhead, right? So what we're trying to do is we're trying to go down and back up. We're trying to go up and keep going, right? Basically as we go. Furthermore, if the sellers want to grab this thing, they've got to really show me they want this with some really good strength here. So let me clean this thing up a little bit. Now you guys know kind of where these major levels are. As the market goes lower, the only way that I can really sell this market, right? The only way I can really sell this thing as it goes lower is if we can make a strong run down, hold a pullback, and take out those lows. If we can make a strong run down, hold that pullback, and then take out that low, I can mark up that low, I can mark up that high, and I can look for a short off the top of a new bear channel. But again, though, we're going to have to see this market dig into those lows. Those bears are going to have to prove it to us that they want more, and we're going to have to see what I call basically a 1, 2, 3 breakout pattern, right? 1, 2, and then 3 is that jump off the moving average. Now, if I can get that 1, 2, 3 breakout, now I can structure my trade to get short. Now we know that range overhead is not the magnet that it looks like it is right now. So if the bears can prove it to us, we'll mark up that low. I'll mark up that high, right off the high of that swing. And I'm looking for a short off the top of what I call a hidden channel, right? It's a 1, 2, 3 move down. That gives the bears control. Well, it maintains the bears control. It confirms they're looking for more and looking for an entry off the high of that channel. Now, I'm not going to go into all the details of the specific setups to get short off that high, but you can imagine, right? Thinking about buyer, right? Buyer failures, you got bear pullbacks, you got strength moves, and of course you got traps, right? Coming off the high of that channel. We'll talk more about those pattern setups as we go throughout the rest of this video. And obviously I cover all these pattern setups, all the entry setups in much more detail in our video classes here at School of Trade. Now, how do we buy it as it's going? Or hold on, where do we think the bears are trying to go? If the bears do get, right, if the bears do get that strong move down, hold the pullback and go, that 3,700 is a pretty obvious target, but I would imagine that 56.5 level, that's probably where those bears are hunting for here tomorrow. We got that level, and then really there's not a lot below that here at this point. Now, as the market goes lower, how do we get long down here? Well, what's the problem? The problem is momentum. So as the market rolls lower, if I can get either into this trend line, into this battle zone, what I'd like to do ideally is take out that big low, right? Take out that big low. But really, if I can get down either, again, off the trend line, off the 63 3/4, ideally take out that low now. Now, again, what I want to do is I want to try to catch these sellers foolishly selling, or, recklessly really selling into that low here. And to do this, I've got to be patient, right? Because I don't want to get too aggressive on this. I want the bears try a couple times. Let them try once, let them try twice. Once those bears give me a couple tries down here, now I know where their stops are, right? And now I know, again, lots of reasons why sellers will take some profit down here, lots of reasons why buyers might be buying down here. If those bears try once, try twice, now we know where their exits are. And we can use kind of a combination setup, which is a failure, and then watch the trend line coming over, right, into that pullback and right back up again. So imagine now a failure into that pullback combination, right? So again, we run down, we take out some of these lows. The bears, of course, for whatever reason, they're not paying attention. They don't know where we are. The range above us acts as a magnet. And again, we use that failure setup into a pullback combination. That is a really nice setup sequence I'm looking for off of those lows. Now, if the market stays sitting sideways, we're going to sit on hands and wait for more information. What if the market goes higher though? This is where I think things can get fun. Because if the market starts to run higher here, right? Let's say the market now runs higher here. The first thing I want to do is anticipate where those bears are coming in. Because again, that 85 level was that big low we talked about from last night's newsletter. So once again, how can I use this range overhead as a magnet? But more importantly, how can I use the sellers? Right? How can I use their stop losses to pour gasoline on that move going higher? We're gonna break out what I call a two-try trap. So if the market runs higher here, what I'm looking for with all of this bullish momentum now is I'm looking for a trap entry. A trap entry is going to be your bread and butter as you go higher here. And the reason why is because of how this thing sets up. Again, the bears will try once, the bears will try twice. I'm going to use that prior low there as almost like a refuge, right? Almost like a protection, because sellers are selling high, I'm going to sneak in right underneath that low where the bears run out of ammunition, and then all I need here is a nice strong signal candle. If you're a seller and you're selling, right, short, once, twice, and then you see this thing trap low and a big juicy green candle there, you are not going to last much longer. Most traders will pull the plug, and when those sellers get caught with their hands in the cookie jar on this one, when those bears get stopped out, it should run higher on some pretty good strength, right? So that's going to be an easy setup as we go. Targets, of course, up at that 42 3/4, right? And potentially one big pendulum swing all the way back higher again. Now, as the market goes higher here, can I sell this thing? I can. It's very important we watch as the market runs higher. Again, as it runs higher, I would love to be a buyer with a trap setup as we go higher, right? Would love to be a buyer on a trap setup as this market uses that range overhead. We might see something different though. The market may run up and we may see these bears come running back in on a lot of strength, right? We may see a real strong shot lower going back down again. Now that's going to be a big sign that sellers are definitely here and they mean business and they're probably not going away without a fight. In that situation now, right, I can get short, but now what I want to do is try to trap the buyers. And I want to go too complicated on this, but I want to trap the buyers now on the wrong side, right? To sell short now, I wait for the buyers trying once, buyers trying twice, and there comes another trap entry, right, to go back down again. So again, that's going to be if we go up, take out those levels of resistance, we see a strong shot down, we get that lower low in price, trap high to sell it back down again. Again, remember, it is a bear market, right? And there's a lot of resistance up overhead. That will be a great setup. How will you know the difference? right? What's the giveaway? How would you know which one to look for? Well, again, if we go up, shallow pullback, and higher high, you know right away. That's your trap entry now, right? But again, if we go up and immediately get smacked back down again, now buyers come in once, buyers come in twice. I want that trap high, right? And we're selling it back down again. As you can see, we use these traps, we use these failures quite a bit around the edges of these trading ranges. Ranges are really common these days, and you're going to want to make sure you really learn how to use what we call failure patterns and trap patterns. Now remember, if you want to get a much deeper dive into failures, traps, and all of my favorite entry setups, they're all included in our free trading course. I'll put a little pop-up there for you in the upper right-hand corner. If you're serious about your trading career, if you're trying to get more consistency in your trading results, or maybe you just want a couple more tools in your toolbox, definitely grab that trading course pop-up there in the upper right-hand corner. It's a free trading class. It'll tell you all about my favorite setups, my entire 3-step strategy, and of course, I'll send you lots of examples of how we apply all these pattern setups to our favorite futures markets. So now we've got a pretty good plan, right? For as the market goes up, as the market goes down, the hardest part right now in the S&P is going to be staying out of the middle, right? Staying out of the middle as we go. All right, S&P is looking pretty good here for tomorrow. Let's keep going. Let's keep going. How about the Nasdaq? Now, Nasdaq is going to be very similar. In fact, you can see a lot of similarities across all three of these markets right now. As you can see, we've got a big range right overhead. The bears, of course, were focused on selling the pops, as we talked about in last night's newsletter. They eventually run this market down into a smaller range that we have below. We're going to use this larger range, of course, right, as a magnet, and of course, we'll use a smaller range to help us time our entries. Real quick, let me clean these up overhead and below us. And let's get after it. Now, once again, there's no doubt about on the Nasdaq, the bears have control. There's no doubt about that. The problem, though, is as these bears try to retest that low, they're trying to do it underneath a trading range. Remember, when it comes to a range, what do? Right? When a market goes sideways like that, what do? You buy low, you sell high, right? And you stay out of the middle. Ranges are magnets. So as the market runs lower, the last thing I want to do is get short down here. Now remember, right, bears have control. The bears now, right, they would love to take out this low at 12,217, big level lower at 12,034. If the bears really get going tomorrow, they may make a run down to that 12,000, right? Get a couple big levels down there, 12,034 and 12,217. That 12,217 level is kind of a big scary level, to be honest with you. But it's a pretty big area of support. You got to go back, right, a few months back. Now, same thing we talk about on the S&P. As the market goes lower, right? As this market goes lower, these bears have to prove it to us. They have to prove to us they have the guts to sell that breakdown. If I can get that 1, 2, 3 move, I can now structure my entry by marking that low, marking that high, and I can look for that, as always, that first test is always the best test off the high of that channel. And again, without going into too much detail, because we'll cover that in the trading courses, and of course we'll do it tomorrow in the trade room, as we look at the top of that, right, of that channel, if we were kind of zoom in this area, right, if I was to zoom in on that area, a lot of times those pullbacks are going to be that combination of a failure into pullback, into strength, right, into traps. So keep that in mind as we go back to the high of that channel, right? Again, it's a failure pattern, a pullback pattern, a strength move into a trap pattern as we go. So imagine, right, we zoom in on that area right there, right? That's the setup I'm looking for. And again, right, I'm just simply drawing on the screen right now. You're going to learn a lot more about each of those pattern setups and all the details of the strategy. You'll learn that in that free course I mentioned in the upper right-hand corner. You definitely want to grab that. So we know how to trade it as it's going lower. We have to wait for that proof, right? Got to get that strength going down. As the market runs lower, though, right? We take out these lows. We run into that 12,217. The range overhead is a magnet. How can I run this thing back up? Right? How can I run this thing back up? Let's get down, right, into some of those areas of support. Let's get those bears, if I can zoom a bit closer here. Let's get those, right? Let's get those bears to get suckered into. One try for the bears, two try for the bears. Once I've got those sellers with that kind of, proverbial rope wrapped around their neck, right? Once those bears are fully committed, now we have a lot of different options now. First of all, we know exactly where stops are, right? Get the range acting as a magnet overhead. Range overhead magnet, range overhead magnet. We're sitting at a major support. That is a great place to look for that reversal. All we need now, there are two ways you can enter on this trade. One is to draw a trend line, right? And you're not always going to get that trend line. Sometimes you do, sometimes you don't. But if I can get a relatively flat trend line, right? As I always remind you guys, you don't want to use those trend lines when they're really steep like this, because those are going to be a little bit too high up to buy, right? If the trend line is really steep like that, what you want to do is focus on a trap to make sure you're buying nice and low. I'm not going to go into a lot of detail on those setups because they're covered in the free course, like I mentioned earlier. And of course, we'll save the good stuff right for tomorrow morning's trade room. But again, if that trend line was really steep, right, I would look for a trap instead, or a deeper pullback on that second try. So again, that's the first chance you get, is off that trend line. Okay. Again, a lot of times we don't get that trend line there, and then you can buy into those stop losses for that rally back higher. Again, though, keep your eyes open for that strong move down. Those bears come over. They try once. They try twice. We buy right into those stops, right? We know exactly where those stops are. We can buy into stops. And then remember, watch that channel on the other side, right? Mark the high, mark that new low, and then hit it on that pullback. Right? These are very reliable setups when used at major turning points, right? It's a failure setup. In this case, we call these nested failures because we're going against the overall momentum of the market. We apply those failures at support levels around the edges of the range, and then we look to add to it, right? Or jump in again on that pullback to the low of that channel. So some very good setups there as we go lower. I want to stay out of the middle. Right? Stay out of the middle. If we get stuck in the mud in the middle, just wait for this thing to go lower and execute the same plan. Nothing really changes at that point. The fun part, like I said earlier, is when the market runs higher. Now, make sure you remember there is a lot of resistance up in this whole area, right? This whole area really could be seen as like one big block, right, of resistance there. That's why I have that red rectangle there. So as the market, if the market now tries to run higher, do you recall those two pattern setups? Again, if you see a shallow pullback and a higher high, what does that tell you? It tells you that the bears are basically striking out, right? They're not able to hold this. If the market does make a run higher, pulls back, and again, it will usually be a very shallow pullback there. That tells you right off the bat, right, where that trap entry will be. Again, the key is that shallow pullback and that higher high. That trap low, again, range overhead is a magnet. Again, momentum is really running now, right? And don't forget, right, you can always mark up that high, mark up that low. Gorgeous, gorgeous, gorgeous spot to get long there as we go higher. Or, again, watch out for this situation where it runs up. The bears come in and they whack it, right? They immediately sell this thing right back off now. Now, at this point, we know the bears are still here, right? We poke the bear a little bit. They go, yeah, we're still here. Don't mess with us. At this point now, I do want to respect the overall bearish trend. But here's the problem. My chance to sell short at the highs is now gone, right? That's kind of one of the downsides of anticipating a buy setup as we go higher, is because I'm not looking to sell off of that high. So how do you avoid that, right? Oh, I can't, obviously if the market goes back up again, I'm not going to want to short it. I'm going to want to wait for that move down, let the buyers now come in, try once, try twice, And again, I want to stay focused on the short side. I'm using the range as a magnet, but remember, the best way to avoid trading inside the range is to get just above it with those trap setups, right? How do you know the difference? How do you know which one is which? Again, if we go up, shallow pullback, higher high, it's an easy giveaway. If we go up and market gets hit hard, it's one try for the buyers, two try for the buyers, trap high, and back down we go from there. I know it's a little bit complicated. I understand that, right? But I know you can handle it. And don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to do this stuff together, right? So don't you worry. We're going to cover this all together tomorrow morning as the market develops in our trade room. So now we kind of know how the market plays out as it goes. And, keep in mind, too, I didn't talk about this on the S&P, but if the market really rips, right? If it really races higher, you know what I mean? If it really rips higher, there's always a chance for that, right? In the overnight session, definitely can mark up these highs. I can mark up that low. And again, I can look for that first test is always the best test, right? Because that is a 1, 2, 3 reversal, right? It's a 1, 2, 3 reversal pattern. Now, it may not be this dramatic, it may not be this large, but as long as I can connect those two highs and then get long on that first pullback, that's what I want to do. And remember, once again, we're not just blindly buying that pullback, the low of that channel. Right, we're looking for failure patterns, pullback setups, combination failure into pullback, into strength, right into traps, and I cover all those setups in a lot more detail. Obviously, I can't cover everything here in this video tonight, but if you want to get a deeper dive into all those pattern setups, what we actually use to actually trigger the entries, make sure you grab that free trading course link in the upper right hand corner. Okay, again, buyers want to go back higher. They want to take this thing up to that, 12,800. Bears want to get down and then hold these lows and keep this party going to that 12,034. Remember, as we go lower, here, back up, here, back up, right? As long as we can take out some of these lows, that is good enough for me to look for that nested failure, right? Those nested reversals off that low. All right, Nasdaq, we got you covered there. Looking good. How about the gold? Now, gold, of course, gold's probably maybe the easier of all three of these here right now because it's just so obvious, that trading range, right? I mean, come on. Look at the chart right now. There's no way you can look at that chart and not see that trading range. And then this one down here is almost less. It doesn't look as good, right? It's not as obvious as the others there. So I think gold, in a way, is probably easier to trade than the rest of the S&P and the Nasdaq. But honestly, it's all very, very similar. What I really find interesting here about gold, though, is right. We had this range in last night's newsletter, right? Big bear move down. And of course, we talked about, right? Shorten the pops, shorten the pops, shorten the pops, right? Above the highs of that trading range. And if you recall, we talked about how the size of that move higher is oftentimes the size of that move lower. So bears, of course, today are shorten the pops, shorten the pops, shorten the pops. They finally get this thing to push through. And sure enough, where does it go? It spends a little bit of time on the pendulum swing. You can see it kind of pokes its head through and then almost immediately closes right back up inside that pendulum swing. Now, obviously, again, we are very bearish. There's no doubt about that, right? We're not a bull market right now. But if I'm a seller, how do I justify selling short down here, right? I really don't see a lot of strength through this pendulum swing. We are only a few inches away from that big measured move at 1684, right? That measured move being that big leg down and that next leg lower. So we have to assume that 83.9, 84 area, let's call it, is a major objective for those sellers. If they do keep it going, right, we've got some more targets waiting below us at 68.7 and 59.2, but it's very similar to like we saw on the E-minis, right, the S&P and the Nasdaq. If the bears want to take this thing lower, they have to prove to us that they want more. Because right now, the fact that we're sitting just a little bit below, again, we're right there on that pendulum swing. The pendulum swing is, don't underestimate the importance of these pendulum swings. Ranges are balanced markets, right? Imagine there is a pendulum right in the middle, right? What goes up will almost always come on the other side of that and then snap back up into that trading range. So that range overhead, right, acts as a magnet. So without sounding like a broken record on this, right, let's go through the plan here kind of step by step. As the market runs lower, I've got the major support low, the measured move low. I'm going to have to wait for those bears to show me they really mean business with that 1, 2, 3 breakdown, which could easily happen. But I'm definitely not going to try to sell that pullback right into that major support at 84 even, right? 83.9. I will wait and see if those bears can push it. If they can push it with that 1, 2, 3 breakdown, now I'm going to mark up that low. I'm going to mark up that high. And as always, the first test is always the best test, right? You want to get to these channels really, really early. Well, on the first pullback, right? You're not going to want to take the second, third, or fourth. The first one is always the best one. And remember, we're looking for, right, as that market goes higher here, remember, it'll be those failure into pullback, into strength, into traps. So a lot of people always ask me, what if you miss the entry off the high of that channel, right? What if you miss the ideal first test? The next best one is a trap later on in the process, right? That trap will be coming a little bit later in the process, right? Again, I'll go over more details, the specifics of these entry setups in that free trading course I mentioned in the upper right-hand corner. As the market goes lower, or if the market goes lower, right? Let them take out those lows, right? Let them kind of close that loop, as we say, get down around that measured move, and then let's see if we can get these bears to commit. Let them try once, let them try twice. Once I've got these bears, right? Once they've got one foot in the grave down there, once those bears are locked in, now those stop losses are primed for us to now use that as fuel, right? As a little gasoline going back up into that trading range, right? Range above us is a magnet. Range above us is a magnet. We're sitting at major support. That's exactly the situation when you've got a magnet above you, you're at a major support level. These are scenarios we look forward to. Look for that nested failure. Watch the market run back. Again, we're buying into stops, right? As I mentioned earlier, grab the trend line, buy strong signal candle coming off the trend line, buying the stops on the way higher, and then again, find that new higher high, or that new channel, and then grab it on the first pullback, right, as we go. We oftentimes will see that high and that channel, right, where you want to hit it. Okay? And then also too, keep in mind too, sometimes what happens is the market will really race higher and run. In other words, it won't pull back right away, right? If that happens, traps, right? Traps. There are a lot of different scenarios, right? There's a lot of gray area in trading, right? I can't go over every possible scenario here. We'd be here till tomorrow morning at the opening bell. But if I can get this thing again, what I'd like to do is get it going up, have it start to pull back, and then use that, right? Use that channel and buy off that channel. If it doesn't and keeps on going, now you want to wait for that trap, right? Those traps will usually be your best bet. And you'll probably also eventually see that channel tested, right, as well. So if the market really races higher there, focus on traps around the low of that new bull channel coming off of that low. Again, I do want to sit on hands. I don't want to trade in the middle. If the market runs higher here, I would love, again, with the bears expected to come in back at these lows, right? We have to anticipate those bears. They may be waiting for us up there and hit this thing really hard up there. The reality, though, is that this range overhead is a big magnet. So what I'll try to do is try to see if I can get some of these bears to commit, right? Let them try once, let them try twice. Once you see that shallow pullback, that higher high in price, now you've got that trap low and you can hit them right where it hurts, right? Buying right into those stop losses. Or, as we talked about many times already, if the market runs up and slams back lower, 1, 2, trap high, and finish off that move, right? I would love to sell the high up here, but again, with that range overhead, with that momentum swinging from below the low of that range, right? There's just too much bullishness and too many magnets overhead here to really be confident selling that spot. I love the area. I just don't like the momentum that we're seeing in the short term. So because of that, I'm going to wait and see if they can hold it. If they can hold it, well, then we know, right? Then we know what's going on, and then we can structure our entry. Again, trying to stay away from the range, trying to sell as high as I can at that point now, and the best way to sell high is always going to be a trap high. So traps are going to be really, really important here, really on both sides of the coin here, right? To look for the best entries as we go lower. And of course, keep in mind, sometimes the market will go up, it'll pull back, and it will just simply blast right off of that moving average. If that happens, right, it's a 1, 2, 3 reversal, 1, 2, 3 breakout. Anytime we see this much momentum in one direction, we know the odds are stacked in our favor that the first pullback off the low of this channel is going to be worth our time. So don't worry so much about where this pullback is, right? Even if it's inside the range here, as long as you get that 1, 2, 3 momentum move. It's like I always tell my clients, right? If it looks like a duck, it's probably going to act like a duck. If it looks like a 1, 2, 3 reversal, and you get that first pullback, and you've got a good failure pattern, right? Strength pattern, trap pattern coming off of that, chances are it's going to act that way, no matter where it is. I always tell my clients in trade room, if you have enough momentum, don't worry where you are. Just focus on finding that entry. Right? It may not go forever, but it will most likely at least go back up to retest the high. So a quick profit target, remove that risk, leave a runner, and see how far that baby will go, right, as it runs higher. And again, we might see a big, it's a lot to ask tomorrow, right? But there may be a big pendulum swing. The amount below the range whips back right up above the high of that range. Right now, though, the bears have control. I don't want to get too aggressive being a buyer here, because right now, again, these bears have control, which means I've really got to be patient and pick my spots wisely as we go into tomorrow's trading session. So hopefully by now you guys can see the plan is a little more complicated, right? Because of these kind of two trading ranges here. We're looking for failures, we're looking for breakouts, and a lot of traps as we go into tomorrow's trading session. Now, speaking of tomorrow's trading session, it is right around the corner. We're going to be getting together tomorrow morning and every morning in our trade room, 8 o'clock Eastern time. I would love to have you there, right there with me, right? Going after those trades along with us. I'll put all the membership information you need either below this video on the trading blog at sidewaysmarkets.com, or I'll put it right in the description of this YouTube video. So again, don't be afraid to grab that link, get registered, and I'll see you tomorrow morning at 8 o'clock Eastern time every morning in our trade room. We're prepping the charts tonight. We're executing the plan tomorrow. I am really excited to see you there, right there with me. Don't be afraid to call the office. I'm always here to help. If you guys need help, call me in the office. I'll be here all evening and, of course, all day tomorrow. I'll also have live chat turned on the left, live chat on the right. So feel free to drop me a chat message there, or as always, right, drop me a question in the comment section below. But that's it for me tonight, guys. Hope you learned a lot on this video. Hope I'll see you tomorrow morning at the opening bell. If not, that's all right. Have a great Friday trading session. A very happy Non-Farm Friday to you. Enjoy your weekend. And of course, we'll come back with our next video newsletter to kick off the second week of the month next Monday evening. That's it for me, though. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.